right. Hopefully we're good now. Um, yeah, like I was saying, so we had SMT in this monthly gap. What the heck? Why did that disappear? Okay. We had high time frame SMT in this monthly gap. Let me switch it back to electronic trading hours. Okay. And we just back tested this new week opening gap. You can see that here. Pretty clearly, we just back tested it. It was aligned with the weekly manipulation level. Arguably, that is more relevant than this daily order block. Honestly, I think the new week opening gap is a more significant key level. So, now what, right? Because I already said earlier yesterday that I was expecting us to go expand and fill this RTH gap. That's what I said yesterday. I said we're probably going to back test this. Let me pull it up. You can see here. Actually, I didn't say it yesterday. I said it earlier this morning. I said we're probably going to backtest this fair value gap and then fill this liquidity void, right? So, with that in mind, we've already done that. We've backtested it. Here's that 2-hour fair value gap. So now what, right? We have to figure out, okay, so where's the next step? Because, like, what is really going on, right? Well, yeah, we backtest this. This is a 2-hour fair value gap. And my best guess right now, well, in the short term, I'm not entirely sure because we did just fill this RTH gap. One idea is let's try and let's measure out the manipulation here. It could be helpful, right? Maybe this manipulation move down here. So from here to here. Okay, so we have the 4 to 4.5 aligned with the weekly distribution level. So that's a nice confluence that could be a draw on liquidity, right? So we'll mark that out. So the weekly distribution level aligned with the 4 to 4.5 here. So in the short term, that could be a draw. I mean, that would make sense. You're kind of running back through this old range here. And then let's get rid of this. Now, looking on the higher time frame, once again, we still have those relatively equal previous week's highs. And if you think about it, this is almost like I know there's not actually a fair value gap here, but it's almost like we inversed the fair value gap. I mean, maybe. I don't know. We'll see. Anyway, we still have those previous week's highs above, and then this liquidity void, which could become a draw on liquidity. So we'll mark out the previous week's highs. In the short term, though, like what's gonna happen tomorrow, right? That's important. That's probably most important. And all I can say right now is it looks like we're drawing towards these previous week's highs, but I don't know. We'll have to dig deeper to figure out tomorrow. So previous week's high number 1, and then we have this previous week's high over here. Previous week's high number 2. And then let's actually turn that on for a second. We have previous month's low down here, previous week's low. I mean, it's possible that we end up using both as... I mean, it's possible that we end up coming back down. I'm not going to say it's not possible, right? We got previous week's high, but we also have previous week's low and previous month's low. The market's going to go to whatever liquidity it wants to go to. In the short term right now, it kind of feels like now that we filled this gap, maybe we need to come take out these guys again, right? It's frustrating though, because like we had this whole thing mapped out, and now it's like, well, what's going on, right? Um, the question is the SMT enough to take us all the way up to this high? Because did I take trades yesterday? You mean today? I didn't take any trades yesterday. Yesterday was Sunday. Yeah, so right now the question is this SMT gonna be strong enough to take us all the way back up here, right? Because we've had so many SMTs lately. We had this giant SMT here. So if I go to the daily chart, we have this giant daily SMT here where S&P made a higher high and Nasdaq made a lower high, right? So we're just ranging right now. And like I mean, I get that we have S&T, but it's already sponsored quite a move higher. How much higher is it going to go now? Now we have to figure that out. Yeah, I took a trade today and I took a loss and it was stupid. And what happened was if I go down the lower time frame, we were in this consolidation. I even said I said, hey, I want to see either this or this get taken out first before I take a trade. And I don't know. I wasn't. Um, I should have just done that. I should have listened to myself. But I did map out that we were probably going to want to come back test this 2 hour gap. I said we're probably going to manipulate into this 2 hour gap and then expand higher. So I got a little ahead of myself. I'll show you the trade. So I I saw that we had equal highs here. So we had equal highs and I knew we wanted to probably come here. But once again, since we hadn't really clearly broken out of this consolidation, it wasn't. Oh, that makes sense. Since we hadn't really broken out of this consolidation, it wasn't exactly clear if we were gonna wanna like I want to see one side obviously taken out and then the other side, right? I guess to be fair, we did take out the low, but I want to see something better than that, right? We just barely tapped below that low. Like this, that's a significant sweep, right? Okay, here's the trade. So, we had this 15-minute gap. Where'd it go? Okay. We had this 15-minute gap. We swept out this low. And we had these equal highs. And then we end up getting S&T in this gap. So we get S&T, I believe it's right here, 851 and 909. But yeah, once again, it was probably a premature trade, and I should have waited for one side of the range to get broken, and that's one of the biggest lessons I learned from today. 851. Let's go in lower time frame. So here we have 851, 909. You can see that was a lower low. And then 851, 909. You can see this was a higher low. So we got S&T in this gap after sweeping out this low. And then let's get rid of this. I saw all of this kind of as low resistance. So this was like low resistance liquidity to me. I thought this was like, okay, I thought we were going to sweep. I thought this was exactly what I thought was going to happen, keep in mind, right? I thought we were probably going to go sweep the equal highs, run down back to the fair value gap, the 2 hour fair value gap, and then distribute. I thought all of that was going to happen. But there were three issues with this, okay? So first I'll show you the trade, right? So the trade was simply we had good signature to it. It was a low, high, low, low, higher, high. Could it have been better? Yeah, I'm. I mean, in the moment, it's hard because like I see SMT, I see fair value gap, I see we swept out the low, I see we have all these highs here and all these highs here, and it seems fine. But what happened was we had this 1 minute breaker. Maybe I need to get off the 1 minute chart, but to be fair, sometimes you'll get good trades on the 1 minute. And anyway, we had this 1 minute breaker. So these up close candles and has good signature to it because we come low, high, lower, low, sweeping out all these lows, and then a higher high, and we get a clear close above with good momentum. And so I saw this as low resistance. I saw this as low resistance. We had this fair value gap overlapped with this. And so I tried this, and I just put stop. I had quick stop to break even. Unfortunately, I didn't even get stop to break even. I had my stop right here, or it might have been here. I can't remember. And I didn't target that far. I just targeted like 2 to 1 or something like that. And yeah, I got stopped out here. And yeah, 3 issues with this trade. 1, going back to the higher time frame, right? We had no clear higher time frame direction yet. Right? We were within a consolidation. We were trapped between this high and this low. So I need to see one of these sides get broken before I get clear buys to where we might go next, right? In this case, once we broke this, you could assume we were going to go here. Once we broke this, you could assume we're probably going to go here. So that was number 1. It was a consolidation, right? Number 2, time and price actually hadn't aligned yet. So if I go to the 5-minute chart here, the 3-minute chart actually, you can see that we have a 3-minute external gap here. And look at this. The wicks are digging into the gap, and they're not closing above it. And my trade occurs here. But if I had just looked at the 3-minute, you can clearly see that this candle is essentially rejecting this 3-minute gap. This 3-minute external gap here. So, time and price would have been aligned if we had instead closed above this, right? If we closed above the 3-minute gap, then came down, okay, there you go, time and price are aligned. But we got a rejection on the 3-minute. So, we then need to come lower, at which point everything had to been aligned, and since we had already rejected this external gap once, at this point we were ready to go up to those equal highs. So it's aligning time and price and understanding like, so this 3-minute hadn't inversed yet. We were rejecting it. Okay, the market's not ready to go run all this. Sure, it wants to go run it, but it's not ready. It'll be ready once we reject it once, like this. We reject it once. We come down, take out this low. And then, at this point, the market's ready to go run all that. Now, I don't really know what entry you could have got here. I would not ever take this inversion because we wicked out the high. So I don't think there was a trade here necessarily, but I am saying like time and price were not aligned yet here. So that's the reason number 2. Reason number 3, so the biggest reason was the consolidation, right? Reason number 3 is, well, I guess not. I'll include another extra reason. Look at the candles, right? The candles, they're still choppy. They're not smooth yet. So that's reason number 3. But then reason number 4 is, I'm trying to remember what the other thing was. I wrote it down in my journal. Let's just go look at it. Okay. Oh, yeah, this was a good reason. So reason number 3 was that if you look at what actually is going on here, like conceptualize it, right? The point of any trade is to stop someone else out, right? You're entering your trade with the idea someone else is going to get stopped out and you're going to take profit.
That's the conceptualization of any trade. So I was targeting this consolidation and this consolidation, right? So these were kind of like the areas of ranges where I was targeting. Now, look at what happened. We had already aggressively wicked into like 80% of it, right? We already aggressively wicked into 80% of this range. And then like 50% of this range. See how we wicked into it? So 80% of the people are already stopped out, and then 40% of the people here are stopped out. So at this point, it does conceptually, like, these people have already been stopped out. The market isn't wanting, it's not wanting to go there anymore, right? Conceptually, these people have already been stopped out by this giant wick. So sure, there's a few more people up here that haven't been stopped out, but we already wicked through most of it. This would have been a lot better having maybe taken this inversion, right? With the SMT. This inversion would have been better because, I mean, when you take this inversion all the way down here, look what percent of the people have been stopped out yet, right? It's like 30% here and then like 5% here. And then when you take this inversion, it's a little bit better because there's just so much more exit liquidity in these ranges. So just conceptualization of actually what is really happening, right? And that was something that I just need to get better at. Like if we wick into my like target for my drawn liquidity really aggressively, like I have to ask myself like, okay, we wicked into it really aggressively. That already took out like most people's stops in there. So I'm not really gonna be interested in this trade anymore because we already wicked through most of this. So that's the third reason, and I think all those reasons combined make this not a good trade at all. So oh well, lessons learned, and tomorrow we will be better. That's the whole idea. So yeah, I think this was the trade of the day with this 1 minute inversion where we hit this 2 hour for value gap, and then we get this 1 minute inversion with really good momentum. And it's basically playing the 10 a.m. power at 3, right? Because the 10 a.m. opens up here, we manipulate into the fair value gap, we inverse, and then we distribute. So relatively simple trade, and it would have worked out great. If I just waited for that, that would have been a lot better. But you know what? We live, we move on, and yeah. So, yeah, I think any trades within here, like, sure, maybe they would have worked out, but they just seem little lower probability, probably. Like, and that's just a lesson that I learned today. You know, if it's within this giant range, it's just gonna be lower probability, and just probably just don't mess with it, right? We did close below here, and then we got a breaker and a fair value gap that overlapped. ICT took the same trade. What, this one right here? This one? Yeah, this was the trade of the day in my opinion. But yeah, then we also had another trade here where we sweep out these equal highs, and yeah, TGR's trade, I'm assuming he took this one right here. I mean, this is the most obvious trade in the world for TGR strategy, but we sweep out these equal highs. I'm almost certain this was the trade TGR took. I'm almost certain. Obviously, he doesn't use breakers, but this is how I visualize it. We have a breaker overlapping with the fair value gap after sweeping out these highs here. And
Yeah. 1 minute IFG? What was the 1 minute? You mean the regular 1 minute for value gap. And so anyway, this one would have been also great as well. And I think honestly, I like marking it out with the breakers out with the bodies. It looks just so much cleaner, and then you could put your stop like above this candle here, and you could have got good RR on this down to the fair value gap. I mean, this was the 2 hour fair value gap was the obvious draw on liquidity. So like, just take it down to the 2 hour fair value gap, and that's a 2.8 to 1 risk reward trade. So once again, if I just had a little more patience, could I have caught in a couple better trades? Yeah, and that's the lesson learned today is if we're in this consolidation, we're range bound. Like, sure, there might be some trades in here. Like, I remember I saw this 30-second inversion. I was like, oh my gosh, I'm missing out. This 30-second inversion worked. But is that a high probability trade when you're in this giant consolidation? No, not really, right? I would rather wait for the high probability moves where 1 and then 2. So in the future, if we're ever chopped within like equal highs and equal lows like this between a 2 hour for value gap, I'm not gonna take anything because it's not directional. It's lower probability. But yeah, both of these trades would have been amazing. The breaker for value gap trade right there, and then this 1 minute inversion. Yep. In the future, I will be a lot more precautious when I see this, right? When I see one, or when I see one, like just chop, right? When I see this, I'm gonna be a lot more precautious and just understand like trades within here are gonna be lower probability. But then once we get this, or once we get this, it's like, okay, light bulbs go off. You can take this trade here, or you can take this 1 minute inversion here. Both of them are good. You know what I mean? So, lessons learned. I do want to show you something really cool though, that you may not know about, and I think it's awesome. So, I don't know if you know about it, but have you heard of the Reaper for value gap? Check this out. So, basically, it's best used when it's like you have a really obvious breaker block that's from like a while ago, and it's the highest one, right? You take the highest old breaker block from a long time ago. So in this case, it's this one, these series of up close candles, right? So that these series of up close candles, the highest series of up close candles from a long while ago, this is the breaker. So hidden in discount of this breaker is when there's a fair value gap hidden within discount of this breaker, it's extremely sensitive, right? It's an extremely sensitive point. And so check this out. If I measure this fair value gap out and drag it all the way over, and keep in mind the fair value gap needs to be within discount, right? But boom, look at this. Right to the Reaper fair value gap, and then expansion off of it. So amazing day for the Reaper for value gap, but like, yeah, that's crazy. I don't know if you've ever heard of that or not, but I think it's pretty sweet. And that was just an amazing example of it working really well. So that would have been an additional confluence for me for this trade here, for this 1 minute inversion, like delivering from the Reaper here. We inverse the 1 minute and then we go run all these highs here. Dude, it's sick. It's so sick. So you just take like, it's an extremely sensitive point in the market. Obviously, like, it's just like any other PD array. It can be respected or disrespected, but it's a very sensitive spot in the market. So here you can see we backtested it right here. Actually, I wouldn't consider this valid yet because we hadn't really closed above this breaker. But like, there's lots of examples of this. Like,
Um, I don't know. I probably have to go back. I don't know how far,
But yeah, it's pretty sick. Um, uh, yeah. As far as like the rest of the day goes, like I think, yeah, maybe there were trades in PM, but I don't know. Low key, like I think these two trades were the trades of the day. This breaker for value gap, and then this 1 minute inversion. So, on to tomorrow, and um, I will be better not to trade in consolidations. So, lesson learned. And this would have been a 3-1, and this would have been like a 3.5-1. So crazy, crazy, crazy. And obviously I would take partials and trail my stop, but in both cases, taking partials and trailing my stop, they'd probably still hit 3-1. So, or at least this one probably would. This one I might. I don't know about this one. I don't know. Either way, they're both profitable trades. So. Yeah, on this one I'd probably just go to break even, and then this one probably, well, I can't say for sure what I would have done, but yeah. Anyway, um, I don't know. There's benefits to trailing your stop, but then there's also like other things that aren't so good. Like if I trail my stop right away here, I get stopped. Like let's say it hits 1-1. So maybe I shouldn't trail my stop because I was thinking like I'll just always just trail my stop really aggressively, but like sometimes you don't necessarily want to. Like in this case, yeah, I'm tired, bro. I've been journaling for like 3 hours, but I I need to do whatever it takes to get better. Yeah, honestly, maybe I just don't trail my stop because low key, I think like for instance, in this case, if like I think moving stop to break even is good, but I don't know. What do you think about? What are your thoughts about trailing stop? Because like I think it depends on the context. Like I don't know what I'm saying. I'm so tired, dude. It's tough because I feel like on this trade, once this hit 1-1, I probably would have trailed my stop to. I probably would have gone, or for sure once this went down to here, I for sure would have. I would have I would have trailed it to there and then got break even. I guess that's fine. I guess in both cases, like let's say it hit 1-1, and I trail my stop to here, like right here, at 1-1. I stopped out at 1-1. That's fine. 1-1's great. I don't trail until 1-1 or 1.5-1. Okay. Yeah. Cause feel like there's benefits to both, like just taking partials and then trailing. Maybe there's no point in trailing because you can just take partials instead. Like why would you trail your stop? Yeah, that's something I'm gonna have to figure out over time. Because if like I can just take partials, then maybe I just don't need to trail stops ever. But I like trailing stops. You can trail 50% or less. Yeah, I could. Yeah, you're right. I don't know, because in some cases it's definitely beneficial to trail your stop. Like if you see really good momentum, like that's when you just trail your stop because it could just keep going and going and going, and then you'll make like 3 times what you were expecting to because you just trailed your stop instead of having a normal take profit. So I think it depends on the context. I'm not going to necessarily limit myself on whether I have to trail my stop or whether I have to take partials, but I'll figure it out with time. So, okay. You prefer trail stop loss? Yeah, I'm thinking the same thing. Cause like, think about it like this. Like with this trade here, this was a great example of like you could have like just taken a 1-to-1 here, or instead of taking 1-to-1, like once it hits 1-to-1, trail your stop to like 1-to-1 right here, and then it just keeps going, you know, and then you're at 3-to-1, and then you trail your stop to 2-to-1, and then 3-to-1, and then you hit a 3-to-1 because you trailed your stop instead of having a 1-to-1 take profit. So there's definitely certain situations where trailing your stop is actually really beneficial. Like this one would be really a really good example of one where you just trail it until it hits your stop instead of having a normal take profit. Anyway, I think I'm gonna be done. I've been back testing for like 3 hours, dude. I'm like I'm gonna make it happen, bro. I need to turn profitable. I need to turn profitable. So all right. Until later. See you, bro. Bye.